Hi, everybody. I'm Stacy.
And I'm her daughter, Mickey.
And welcome to KiddieNomics. Wait, let me start my horn all over again. Let me start it over again. Can you hear it? Oh, it's not working today. Oh, well. Sorry. All right, everybody. Welcome to another fun-filled edition, Friday of KiddieNomics. We are so happy that you guys are back, or that we're back. We took last week off, right? It was Easter weekend, so I'm hoping everybody had a wonderful long weekend. And now this is going into some of you guys' spring break week. So uber excited to start off your spring break with KiddieNomics. That's awesome. So we are happy today because we have our returning guest expert, Miss Gloria, and she's going to talk to us all about how do taxes affect our investments. Now, this is like a big one because it's a pillar. In order to grow your financial wealth, you have to understand how do taxes affect each part of the different things that you may invest in, right? So before we get started into that, let's get to our housekeeping items of KiddieNomics, right? Right. Okay, hang on, everybody. Let me share my screen. I'm sure all the kiddies are saying hi. All right. Here we go. Shared my screen. There we go. KiddieNomics. Okay, so first I'd like to start off by saying welcome to all of our new KiddieNomics kiddies that have registered in the last little while. Welcome to KiddieNomics. If this is your first one, don't worry. We are super kind on KiddieNomics. And so the kids will welcome you in the chat. If you say that this is your first time, they'll be very nice and welcome you. And of course, welcome back to all of our returning KiddieNomics kiddies that are here with us week after week. We love you for being here. So thank you very much. All right, so what is KiddieNomics about, right? What is KiddieNomics? KiddieNomics will help kids ages 8 to 13 to develop a healthy relationship towards financial literacy, helping to start kids off on the right path to have a successful financial future. That's what I want for you. That's what she wants for me. That's what I want for all of you guys out there. We want to make sure that you guys are so educated. You guys are going to make the best possible financial decisions that will give you the pathway to your most successful financial future. So that's what we want for everybody, right? Right. All right. So should we do roll call before I get into before we get into the housekeeping items? All right, let's do roll call. Let me open up the chat box because it's already very busy. I got 37 messages already. Okay, roll call in the chat box. Let me know where everybody is joining us from. Let's see, Melanie, Canada, Godswill, Canada, Micah, England, Anne, Canada, Jenna, Canada, Madeline, Canada, Kepler, Kepler 22B. I'm gonna have to find out where exactly that is from. Like which planet in the solar system that one is. Danielle, he's from Jamaica. Yay, Jamaica's joining us. Woo! Nicole is from Mars. Janaya is from Canada, and it's your birthday in 3 days. Oh my gosh, everybody wish Nayana happy birthday in the chat box. Happy birthday, sweetie. That's awesome. Joshua's from Superhero Land, so that is awesome. Oh, Leah, your birthday already passed. Well, happy belated birthday. You should have told us so that we would have wished you happy birthday on KiddieNomics, right?
I'm from Haiku.
Oh, Mickey's from Haiku. She's very much into anime. So this is her anime. All right, Madeline says happy belated birthday. Okay, all right. Thank you, everybody. Madeline says, yay, anime. All right, so I'm going to continue on. You guys can continue chatting in the chat box. Okay, so speaking of the chat box, and I'm going to get into some housekeeping items. Please remember that every KiddieNomics webinar is recorded. So while we're live, I do record every KiddieNomics webinar, and then I share it on our KiddieNomics YouTube channel. And so you can see this video and all of our past KiddieNomics videos on our KiddieNomics YouTube channel. This video will be posted today by 8 p.m. tonight, 8 p.m. Eastern Standard Time. So you should be able to watch it back in case you've missed any of the information that we're going to be talking about today, okay? Now, speaking about the chat box, because we cannot see or hear any of you that have joined us, to maintain everybody's privacy, the only way to communicate is through the chat box that's either up above, down below, to the side,
Hey,
to the
I'm
side.
supposed to say that.
All right, do it. To the corner. To the corner. All right. So you always have to remember, even if you raise your hand, even if you raise your hand, please remember to put the question in the chat box. You still have to type it in the chat box, okay? Logan, you raised your hand. Now type your question in the chat box. All right. Okay. So, and also remember that I don't want to see any personal information in the chat box. Okay. So, because you want to maintain everybody's privacy, remember we had the KiddieNomics webinar about how to maintain online privacy. So because of that, if you haven't seen that one, please feel free to watch it back on our KiddieNomics YouTube channel. But please remember, no personal information. So what does that mean? Like, I don't want to see any email addresses, and I don't want to see exactly how old you are. Telling me it's your birthday, that's fine. We'll wish you happy birthday. But I don't want to see ages or exactly where you live or your phone numbers, right?
Yeah.
None of that, right? In the chat box, okay? And also remember that we have kids, 8, and then we have kids that are 13 or maybe older. And then we also have kids that are younger than 8 that do join us. I just want to remind everybody, oh, am I freezing? Oh, no. Okay. Am I freezing, everybody? I think I was freezing a little bit earlier. No, you got, everybody can see me? A little? All right, Melanie. Not for you, Logan? Okay. All right, I'm going to continue on. Hopefully it doesn't freeze too much, okay? Also, what was I saying? Remember that everybody's question, because we have kids of all different ages, remember to respect everybody's questions because they may not understand, and no question is stupid, right? So we want to respect everybody's questions, and we would like to keep KiddieNomics fun and happy and free. But we like to have a very fun community here on KiddieNomics, as you guys are all aware, guys and girls are all aware, right? So just remember to respect everybody's question in the chat box, okay? And if you see me say in the chat box that I said, oh, okay, everybody, let's focus back on the expert, it just means to simmer down on a little bit of the chatter that's going on in the chat box, because the chat box is to be used to answer and to answer questions and to ask questions, okay? All righty. All righty. Okay, so now we're going to get into our special guest. She'll be back in a minute, but we're going to get into our special guest. Our special guest is the returning, the phenomenally smart, because she's going to tell us how many degrees that she has. Like, she is so smart. So Miss Gloria, she is the owner and the CPA of Nuage. Is it Nuage Group?
Nuage Consulting.
Nuage Consulting. Yes, that's right. All right, so let me read out the bio. Intelligent, career-focused, and determined accountant with a double CPA qualification from the DRC, Africa. Gloria graduated high school at the age of 16 and embarked into a journey filled with excitement and passion, accounting and finance. I bet you never thought that accounting and finance was like exciting, but it is. Gloria makes it exciting. She earned her education in Europe, and within 8 years, Gloria gained 4 professional qualification designations: CPA from Ireland, CPA from Canada, CGA from Ontario, and accounting technician, and 2 degrees, bachelor's of honors degree and master's degree. So can we just say that we have a phenomenally smart woman today on KiddieNomics? We are so happy to have her back and to return to KiddieNomics. So let's give a very big KiddieNomics round of applause. There you go, to Miss Gloria. All right, Miss Gloria, I'm gonna stop my share screen. There you go. Hi. The kids are saying, hi, Miss Gloria. Welcome, welcome. They're all saying in the chat. Good job. They're saying
Thank
claps,
you.
claps, welcome.
Yeah.
Thank you.
We're getting a lot of claps. So over to you. Go ahead.
Alrighty, thank you. And thank you for having me back. And hello, everybody. I hope everybody's enjoying the weather, at least this side. You know, the sun is still out and it's very lovely outside. Okie dokie. So I'll start by sharing my screen. Believe it or not, I have to figure out where I have to go to share screen. Here it is. Sure.
Yes, at the bottom. Yeah.
Okay. So I will be sharing this PowerPoint presentation that I created and full screen. Full screen. Okie dokie, here we are. Okay, so can everybody see my screen? The presentation? Awesome, great. So how taxes affects your investment? By myself, yours truly, Gloria. All right, so just a little bit about myself. Stacey already mentioned it. I kind of lived in different continents, and so I started off my studies in Ireland, my professional studies, by gaining an accounting technician degree. And then further on, I did my bachelor, master's, CPA, and then decided to, get some US experience. So then I moved over to Canada and I converted my CPA into CPA Canada here. And so what do I do? Well, I'm the principal at Niage Consulting Inc., of which the website is www.niage.ca. Niage is Nuages, which is actually a French word for cloud, Niage. So type of services that we provide, consultation. So we strategize for you with your business and how things should be going, how things should be running. We offer tax services for personal, corporate, payroll, HSC, investment, let it be anything tax related. Of course, we also do accounting services, so bookkeeping, year-end, unaudited financial statements. We deal with the CRA, and of course, for every work that you do with us, you have us for the full year to ask us any accounting or tax-related questions you may have. So in the past and present, and hopefully future, I have worked with the CRA, which is the Canada Revenue Agency, the IRS over in the US, Internal Revenue Services, the HMRC over in the UK, and of course, Revenue Commissioners in Ireland. Okay, so let's get it started. All right.
Sorry,
Go ahead.
we already have a question from Ngozi. They want to know, can you tell them all the places that you have lived? They love geography.
Okay, so I was born in Congo Kinshasa. So that is Central Africa, the second largest country in Africa, I believe. So that's where I was born. And then I moved over to South Africa. I was there for about 5 years. And then from South Africa, I moved over to Ireland. I was there for quite a while. And then after that, I moved here, Canada. So I've been in Africa, Europe, and North America, and I'm a dual citizen. Well, 3 if you count the other one. But yeah, that's me. I've been quite many different places, and so far Canada is good. I might move again. You never know.
That's good. You're a world traveler. That I'm sure it inspires the kids to know that there's such a big world out there.
Oh yeah.
Cool places for them to travel to.
Yes, if you can, like if you can, I would recommend for anybody and everybody to just travel and just get out and just see different places, see different cultures. We really learn a lot by traveling. It doesn't have to be international. It can just be out of your city, Yeah,
especially now. You can travel when it's safe.
of course. I don't want you saying, yo, Mama Gloria said I have to travel. Nope, I didn't say that. Yeah. Okay, so what is an investment? So to invest is to allocate money in and then expect some sort of return. So in other words, is when you when you own an asset or an item with a goal to generate income from investment, and then of course over time it will increase its value. So let me just simplify that for a minute. An investment is to allocate money in an expectation of growth or benefit. So I have a perfect picture here to illustrate investment. It's like a seed. When you want to plant something, anything, fruit, vegetable, flowers, you start with a little tiny seed. and that seed you put it onto the ground, and then every day you water it, and then eventually the seed will grow and blossom into a beautiful plant. That is the same thing with investment. Investment is when you put something or you put money away for a period of time with an expectation for it to grow. All right, so there are many type of investments. There are stocks, bonds, investment funds, bank products. There are options, retirement, saving for education, cryptocurrencies, security futures, insurance. So they're all different type of investment. So whichever investment you're familiar with or whichever investment you want to learn, you can always go ahead and invest. And I just realized I missed a T in my word investment. All right. So type of taxes that if
Sorry, can I just go back to that last slide, Miss Gloria?
okie
Your last
dokie,
slide.
which will give me a chance to put a T. Yeah.
Perfect. So some of these we've already covered on KiddieNomics. So Miss Gloria was just skimming through them, but we have done one on stocks and bonds.
Okay.
We've done bank products. We've done saving for education. So we've done that one a few times. So your RESP, yeah, your registered education savings plan. So we've done that. We've done Bitcoins. So we talk about cryptocurrencies and stuff like that. So we have covered a lot of these topics. If you guys want to go back and watch our KiddieNomics YouTube channel and look up some of these topics, and you'll see that we've covered quite a number of these in the while that we've been here on KiddieNomics. Okay. All right. Hi, Logan. I see you raised your hand, and Layla, you raised your hand. Please remember to type your questions in the chat box. I'm just going to read some comments out before you continue there, Miss Gloria, because Joshua's like, so he's saying, so money really does grow on trees.
Yes, money does go. No, like literally, money does grow on tree because money is paper, right? Unless you're talking about coins, paper. And where does paper come from? Trees. So money grows on trees. You just have to know the type of tree.
Gotta find that special tree.
Yeah.
I guess so. And Joshua, I did get your other questions. I'll ask them at the end. Okay. All right. Go ahead, Miss Gloria.
All righty. Okay. So type of taxes that affect your investment. So on top of my head, I can think of three. So capital gain tax, sales tax, and income tax. All right. So what is capital gain tax? So basically capital gain tax is a tax on the profit realized on the sale of an asset. So the most common capital gain are items that are realized. So let me just break it down into small pieces, okay? So capital gain tax, also known as CGT, is the tax on the profit of any of your investment, but that investment has to be realized. So when they say realized in terms, you kind of gotta cash it out. Okay, so for example, when we do stocks, we purchase stocks and we sell stocks. And let's say you purchase a stock for $2 and now the stock is at $5. So technically you've made $3, but until you actually sell the stock, it is not realized. It's unrealized gain. So you need to sell it in order for it to be realized. And then it's the profit on top of that, that is the gain. So hence capital gain tax. Okay. And so investors here in Canada and also in Ireland and majority of countries worldwide, the capital gain tax rate is 50% of the gain amount. So back to my example, you purchased your stock for $2, you sell it for $5, so you made $3 of a profit, of a gain. So out of that gain is not the full $3. So it's only 50%. So $1.50, that's the amount that is going to be taxed. All right. And of course, here we have a greater example. If you earn $1,000 in gain, and let's say you pay taxes, your tax bracket is maybe 53%, then you will only pay 267. So 50% of the 1,000 is 500, and then you're using a tax bracket, which gives us $267. So the second type of—
Can you go back to that and maybe slow it down for the kids, because that was a lot for them to swallow. So did you guys, did everybody get that, what we're talking about for capital gains tax? And I think a few of you guys are saying that we are freezing. Are we frozen? No? Okay, not on your screen. Okay, all right. So if we do freeze, don't worry. If you do miss a few things, can you just remember that this is being recorded? So just watch it back on our KiddieNomics YouTube channel, and it will have the entire webinar on there, okay? In case we do freeze in the meantime, okay? A few of the kids say yes, they don't understand. So let's go back to capital gains and maybe slow it down a little bit so that
I understand.
you understand. Okay, that's good. That's awesome. Let me see. Some of the other kids don't understand. So Ibby says he doesn't understand. Joshua doesn't understand. So can we just redo the capital gains example again?
Yeah, I'm trying to think of a different example that I can give. Okay. Well, let me talk. If I think of something, I can go ahead and mention it or illustrate it further. So capital gain tax. Break it down in 3 different words, which is capital, the gain, and the tax. So the tax is a charge, okay, on anything and everything. That is the tax part. The gain part is the profit, the plus. So if you eat too much chocolate, you will gain weight. So the gain is the plus side. So anything that is more, it is a gain, okay? And then the capital is similar. So capital gain tax is the gain, the increase in value that you get from whatever investment you have, okay? So the official or the unofficial definition of capital gain tax is the tax on the profit that you realized on a sale. So the word realized, there are 2 words. So there's realized and unrealized. So realized is when it actually happens. So let's say I buy 2 chocolate bars, and then I break those chocolate bars into half. Now I have 4 chocolate bars. So in total, I have gained 2 different chocolate bars. So I have realized it has happened, okay? And then I will get tax on the extra 2 chocolate bars. Now in Canada, when it comes to taxes, it's only 50%. So the amount of taxes that I will pay is only on 1 chocolate bar. I hope I have not confused everybody at this point. So let's just back it up a little bit. I have 2 things, and then I have invested these 2 items. And after a few months or years, the 2 has turned into 4. So technically I have gained a 2 extra. So now I have 2 here and the 2 new items. So out of these 2, 2 plus 2 gives me 4. Now I have 4 fingers. We went from stock to chocolate, now we're doing fingers. So I have 4. So out of these 4, let's say if I decide to sell it, the government will come and tax me on 50%. Instead of them taxing me on all 4 fingers, they will only tax me on the 2 fingers, 50%. So did everybody understand?
Yes, they had a question.
Okay.
Ibby wants to know, so they won't tax you if you don't make a profit?
Of course, no tax on no profit. So if you made a loss, there's no taxes.
Well, that's good to know.
Yeah.
Okay, so let me just see, does everybody understand? Okay, Layla, I will get to your question. Ibby says, okay, thanks. I do not understand what's income. Oh, what income is. Can you explain what income is?
Income. Income is revenue. Then you ask me, what is revenue? Revenue is something that you have earned. So if you earned something, if you receive something that, and it's of a monetary, so it's money, it's monetary value, that is considered as income.
Perfect. All right, perfect. I think the kids are good.
We're good to go? Okay, great. So when it comes to investment, what type of taxes affect your investment? The first one is the capital gain. So any surplus that you make from your investment, it will get taxed. The second type of tax is sales tax. In here in Canada, we call it HST, so harmonized sales tax. It's provincial and I wanted to say federal, yeah, provincial and federal taxes together. It's called HST. Over the other side, Ireland and UK, it's VAT, value added tax. So sales tax also affects your investment. So let's say sales tax is charged upon immediate reassignment of real estate. So let's say if you buy a house, and then let's say it's actually a pre-construction house. I have to be specific. So if you purchase a pre-construction house, apartment, condos, whatever, go ahead.
Sorry, Miss Gloria, let's clarify what is a pre-construction house.
Pre-construction house is a house pre-constructed. So before it being made. So it's a pre-constructed, it's before being made house. Normally you may be used to, a house that's already built with the roof and the walls and everything. But there are also type of houses that has not been built yet. So it's still, they're still, they have not put up the roof and the walls and everything. So pre-construction, it's like when you have a cake that's already made and when you have flowers and eggs and all the good stuff that you need to make the cake.
Perfect.
All right. Okay, so when you purchase a pre-construction house, apartment, whatever you want to call it, real estate, and once that house has been built, so once they finish building the house and you sell it off immediately, you reassign it because originally it was assigned to you, but then you reassign it. That's when there will be a sales tax, but that will be temporary. So I believe for about 2 months, and then you can, when you file your taxes, then the government gives you back the sales tax amount that you paid. So this is something very important to keep in mind because some folks may not know about it. They will just, buy a house and then the house goes up in value and they will resell it. Guess what? Or they will reassign it. Guess what? You will, there is sales tax to pay on top of that. Okay, we're good to go? Yep.
So sales tax, Jenna wants to know, what if you didn't sell it immediately? When do you necessarily pay the sales tax?
So you can bypass, as in you can not pay the sales tax if you live in the house for at least 15 months. So for a year and a half, if you do not want to pay the sales tax, then you have to live in that house for a year and a half.
Okay.
Oh, wow.
So you have to live in there for a little bit to not pay the sales tax.
Yes. Or if you reassign it, or if you put a tenant in it, you have to look further into it to make sure that there isn't a lot of tax burden.
What if it's that is only on an investment property? Suppose this is the house that it's your home, like your principal residence.
So when it comes to your principal residence, the only good thing that the government did for us is to not charge us any taxes on it. So if you have a capital gain on your principal residence and you've decided to sell it, you get a capital gain. There are no taxes. Everything in your pocket, it's your money. But if that house had tenant in it and you have a capital gain, that's when you pay taxes.
So if you had a tenant in the basement and you lived upstairs,
yes,
and it was your principal residence, then you would pay a sales tax when you sell it?
Not a sales tax. You will pay a capital gain tax. It will be apportioned according to whatever portion the tenant uses. So if yourself, your own house, you use 100% of your house, you sell it, you make 100,000, it's your money in your pocket. But if you had a tenant living in the basement and they use 50% of the house, well, guess what? When you sell it, 50% of your gain, it will be taxable at 50%.
Okay. Does everybody understand that?
Yeah.
Hi, Joshua. Okay, Joshua, I see your questions. Those are if Joshua wants to know what happens if you make multiple offers on a house. But that's not really what we're talking about right now for taxes. Mickey, you have a question?
Yeah.
Mm-hmm.
How much houses can you buy?
Mickey wants to know how many houses can you buy?
Me personally, or can an average person?
Like everyone.
How many? Well, it depends on your pocket. It depends on how deep your pocket is, you know. If it's this deep, you can only buy this much. But if it's this big, you can buy that much.
Good to know. All righty. Joshua, we will have another KiddieNomics webinar just talking about real estate again. And so you can ask all of those questions that you're asking in the chat box to that expert about real estate. Okay? Okay, awesome. All right, I think the kids are good. Did everybody understand the sales tax? Yeah? Let me know in the chat box because I don't see anything. Yep. Yeah, now I do. Lath, yes. Okay, Lathan Blake. Yep, Madeline says yes. Okay, perfect.
Okay. So, and the third tax, this is like the mother of all taxes, is the income tax. So everything comes down to income tax. Of course, somebody asked what is income? Is any monetary value that you have gained as a revenue. And then tax is when the good old CRA comes in and chops your money, okay? So when you have investment and you sell the investment, you make a gain, you've realized it, there will be income tax to pay. Of which income is a type of tax that the government imposes. You can generate income from a business, from anywhere. As long as you have a gain, as long as you know there's value to it, that's where the taxman comes in. And of course, you do your taxes every year. So actually right now, this is the tax period. So if you sold any stocks and you've gained it and you've made a gain, you may have received here in Canada, we call it a T5 for the capital gain. There is also T5008. There is a T3 for the trust. And of course, there are all other tax documents that you may have received. So income tax is tax on the income that you have earned. And of course, what is tax? Tax is a financial charge imposed on the taxpayer. Yes, ma'am.
Miss Gloria, Madeline wants to know, what does impose mean?
Imposed is when they make you do it. They make you do it. You have no choice. You know, when your mom says, stop it and go do the dishes right now, and she gives you that look, and then she has the finger going like this. Yes, that's when you have no choice but to do it. That's imposed.
That's a good one. Joshua would like to know about income tax. He wants to know how much should be deducted from your paycheck.
It depends. It depends on your global income. So income tax, there are many income type of incomes, many type of deductions. So from your employment, from your investment, from your retirement, from any disability. So there are many different type of income.
Fantastic. Okay, he says okay. All right, go ahead.
All right, cool. Okay, so anyone that makes income, of course, you have to pay taxes on it. So you can even be a dancer, you can be a movie star, you can be a farmer, you can be anybody, as long as you have investment and that's under your name and you have made a profit, a gain out of it, then you will have to pay taxes, okay? So then I have a question for you kids. Do you think you should pay taxes? If so, why?
No.
If not, why?
Mickey
Because,
says no.
because then you're just spending your money, and after when you spend your money, you don't have any more money to pay your taxes.
So you shouldn't pay taxes so that you can save your money?
Yeah, and then after you can pay all the taxes later.
So she says you shouldn't pay taxes when you're a kid, basically, so that you can save all your money and then you can pay taxes later.
Yeah, when you're 85.
Joshua says she's right. Let me see. Let me see. What do you kids think on this question? Do you think as a child, should you have to pay taxes?
Nah.
Let me see. No. Micah says no. Micah and Gay says no because I'm not yet at working age. That's a good answer. Godswill says no. Joshua says no, my poor money, no.
At least we have choice.
Danielle says, I agree, pay when we are 85.
See?
I love that specific number, when you're 85 years old.
I always put everything with 85.
Brielle says no. Ngozi says, we don't make much money. That's true. Joshua says, I need it for the poor. Layla says no. Leif says, I think we don't have the right to because I have savings. You know. Jenna had a question actually, so I'll get to your question, Jenna. No, we don't have the money, she says. I think everybody's going with this 85. They should pay taxes when they're 85.
I just started a whole time.
Madeline's answer is awesome. So she says yes, because taxes goes to the government, then to school.
Yes, that's actually what I
Oh.
taught you guys the last time.
Yes.
Yeah.
So Madeline remembers our webinar from what you had presented a couple of months ago. So that's awesome, Madeline. Tamara says no, because our parents have a credit card and a debit card. So basically your parents can pay for it.
Yeah.
All right, perfect. So there's their answers there, Miss Gloria. What do you think?
Well, it depends, right? Because like somebody they mentioned, and like I mentioned in the other webinar, is that the tax money that you pay goes to a whole lot of different department services, and it's kind of works for you at the end. And of course, if you do not pay taxes, then we'll have a broken system and you will kind of suffer. So it's your money, it just goes to the left and then it turns around and comes back to you to the right. So at the end of the day, you should pay taxes. The question is how much? That depends on everybody's situation. But definitely, if you can, sure, go ahead, pay taxes. And hopefully we don't have any corrupted government that will, divert the funds. But we shall not get into politics. All right. So,
Awesome. Jenna
ready
had
to
a
go to
quick
the next
question.
slide?
Yes, Jenna had a quick question before you go to the next slide. I think it was for your last slide. She
Sure.
wants to know, what does file taxes mean? That's a good one.
File taxes is when you submit your taxes. So every year, everybody, especially if you're 16 over and working, if not, if you're 18, regardless of working or not, you have to submit your taxes to the government. So to the CRA, file your taxes, you submit your taxes, which has a record of your income, your expenses, and of course, any deductions or credits that you're entitled to. So that at the end of the year, you can determine if you owe taxes or if you'll be getting a refund.
Fantastic. Joshua has a statement. He wants to know about the child tax credit. He says, I have no 2000 child tax credit. I guess he wants to know, what is the child tax credit, because we're talking about taxing kids.
Child tax credit, I think maybe you're using the wrong term, because there is no such thing as a child tax credit. There is a child benefit. There is claiming for dependent tax credit. Maybe you're talking about that, dependent tax credit. And of course, there is a single parent tax credit. So I will quickly describe the three. This is three, not four. Three. So the first one, the Canada Child Benefit, is a child benefit that the government gives to every single child here in Canada. The amount received, it is tax-free. You do not get taxed on it. The parents do not get taxed on it. And of course, the amount is based on the household income. So the more money the parent make, the less child benefit they receive. And the less money they make, the more child benefit they will receive. That is the Canada Child Benefit. The second item that I mentioned was the dependent child credit. So this is when, if a parent is claiming you, the child, as a dependent, and if you, the child, have a couple of tax credits to your name. So it can be disability, it can be tuition, or it can be if your parents do not live together, then they claim you as a child, then they will receive the dependent child credit. So I hope you understand. So there isn't really a child tax credit, but there is a dependent tax credit.
Perfect. I think he got it.
Awesome.
You can go ahead to the next slide if you have one.
Okay, okay. So that's it. My next slide. Thank you for your time and your attention. So basically, just to quickly wrap up, when it comes to investment, there is the capital gain tax, which is tax on any profit that you have made, and the percentage is 50% of the gain. There is the sales tax. If you purchase a pre-construction building and you reassign it, or you want to do something else to it other than yourself living in, there is a sales tax on it, depending on which province you are. Here in Ontario, it will be 13%. And then the third thing, there is the income tax. So when you file your taxes at the end of the year, you have to include your gain, from your stock, from your investment, from your actions, from your options, everything, you put it all together. And then the income tax is what you file to the government at the end of the year. Okay, so then quickly, a quick recap about myself and the type of services that we offer. Tax services, because it's tax season, so we deal with a lot of personal and corporate taxes. Accounting services, bookkeeping, financial statement, forecasts, budgeting. We deal with the CRA. And of course, living here in Canada, with the folks that works in the US. So we also do cross-border return for the folks in the US. And does anybody have any questions for me?
Yes, so I had a question. Jenna has a question. Can you go back to slide 2 about what is an investment? So she wants to know if you go back to the beginning. And while you're doing that, I remember Joshua had some questions about your job. So he wants to know, why did you become a CPA and what exactly, why did you become a CPA, right? Joshua, what was your question? Why did you become a CPA and how do you like it?
No, I think it was, how did you get your job? Do you like your job? And
yeah, how do you like it? Yeah. Why did you become a CPA and how do you like it?
And how do
Why did I become a CPA? I don't know, because I had nothing better to do with my time. I find myself to be good in accounting. So since primary school, since in South Africa, actually, that's where I did my primary school, and about the first year in secondary school, I found myself to be good in accounting, in numbers. And when I moved over to Ireland, I was doing accounting and business studies, and I just find myself to be naturally good at it, although I also did biology and science. But accounting and business seemed to be fairly easy for me. So then after high school, I went to university and I just decided to pursue the accounting route because I found it easy. So then I just kept on going, from associate degree to bachelor degree to master's to CPA. I'm like, if there's a PhD equivalent, I would go ahead and pursue it and get a PhD in accounting, because I found it easy. I found it naturally easy for me to understand. So that's why I went ahead and became a CPA.
Perfect. Nice to know. Ibby has a question. If you were like an American citizen, but you live in Canada, where do you pay your taxes? That's a good question.
Yeah, that's actually very good. So if you are American citizen and you live in Canada, and if you worked, okay, let me back up here. If you're only an American citizen, okay, your tax obligation is your home country, the USA. So even if you live and worked here, you also have to file your taxes and remit any difference to the US. Now, the good thing is there are tax treaties. So that's when each countries, they agree that, hey, if your buddy stays here and lives here, they pay taxes in Canada, but then because they're a citizen, they also have to pay taxes in the US. So instead of them paying taxes twice, they will only pay once, the higher amount. So now if you're a dual citizen, so if you're American and Canadian, and you have been living in Canada at least for the full year, and the income that you have earned are from Canada, not from the US, the employer is not from the US, so everything is Canada based, then you only have to pay taxes in Canada. But you still have to file taxes to the IRS, of which you will not pay any taxes to the federal government. You just have to file to disclose that you did receive foreign income from Canada.
That's good to know. That was an awesome question. So good job.
Very smart.
Karen would like to know, do you deal with child disability tax and what is the process? And she would also like to know, will you be doing these sessions again? So Will should be back on KiddieNomics. We hope so. We always.
If you like me,
to
if
come
you
back
want me back, I'll be happy to be back here. So child disability tax credit, it's a tax credit that you receive, and it's actually great. It helps the child and the parent. So in order for you to qualify for the disability tax credit, of course, you have to have a disability. So then it is your doctor. So there is a form that you bring to your doctor, and then your doctor will certify if you are disabled and your disability. And then you take that form, you submit it to the CRA. And then from there, they will give you a disability certificate. And from that certificate, then you can get the tax credit, of which it will help you and your caregiver or your parent.
Perfect. Jenna would like to know, can you go to the next slide, which was the types of investments?
Okay.
Okay, thanks.
Okay.
Yeah, that one. And then Leith and Blake would like to know, what does CPA stand for?
So CPA, depending on where you are, here in Canada, CPA stands for Chartered Professional Accountant. In Ireland, CPA stands for Certified Public Accountant. So I am both a certified public accountant and a chartered professional accountant.
So smart. Love it. All right. So I think that is all the questions.
What about my question?
Oh, sorry, Mickey, you had a question.
Yeah. Okay, so if you had a bigger house, would you have to pay a bigger, like, more taxes, or?
If it was an investment property?
No. Okay, so if you had like a mansion, would you have to pay more taxes? And if you had like a small house, would you have to pay less taxes?
So the bigger the house, more taxes. The smaller the house, less taxes. That's what you would like to know.
Not necessarily, it's the value. It's the value of the house. Here in Toronto, you have tiny houses, but the value is great. So it's the value. If your house is worth $1 million, of course you pay more taxes. But if your house is worth 10,000, you will pay less taxes. So it's based on your value, the value of the house.
Makes sense now.
Perfect. All right. It looks like Tracy had one question that I must have missed. So Tracy, if you can quickly type it into the chat box to get Miss Gloria to answer. Otherwise, we're going to wrap up. And we'll end up wrapping up early today. Yay!
Yeah. And here is my email address, Gloria at nuages, nuages.ca. If anybody has any other questions, or if anybody want to take anything offline, that's my email. Feel free to shoot me an email and I'll be happy to answer.
Perfect. And also remember that I always post each expert's contact information in the description box on the YouTube video that is posted. So if you ever want to get in contact with any of our experts, if you go to that video and just look in the description, so I have a whole bunch of information there, including an activity for every single webinar that we've hosted for KiddieNomics. So each webinar comes with an activity and it has the contact information for each expert on there, okay? Tracy's question is, why do you have to do taxes? What if there was no taxes? Why do you have to pay taxes? What if there was no taxes?
You have to pay taxes to kind of keep the economy going, to keep the world turning. You gotta pay taxes. There have to be taxes because the road that you drive on, who's gonna build it? Who's gonna maintain it? You know, if you want somebody else to maintain it, then why should they spend their money for your benefit? So taxes is kind of a community thing, right? When we all put money together for the greater good.
Perfect. Laith and Blake want to know, what age can you be a CPA? I guess they're thinking about it now. So how early can you become a CPA?
Well, let me count back the years. I graduated high school at the age of 16. And then 2 years after, I got my associate degree, so 18. And then 2 years after, I got my bachelor, 20. And then 21, that's when I got my master's. And then to do the CPA, it took me 2 years. So at the age of 23, I got my CPA. So you can get it earlier, you know. If you graduate high school at 16 and you embark into the CPA route, 16 plus 5. So you can get it earlier. By 21, you know, you can get it earlier than 23. I got both CPA by the age of 23. So you can get it earlier if you want.
That's fantastic. So I think you've inspired some of the kids to get into being a CPA as they get older. That's so phenomenal. That's what we love to see here on KiddieNomics. So thank you, Miss Gloria. Yeah. All righty. Okay, so I think that's it. Thank you, Miss Gloria. I'll just wrap up and I'll do a wrap up. So if you stop sharing your screen, everybody give Miss Gloria a big round of applause in the chat box.
Thank you.
It was phenomenal. The kids seem to always love taxes with you. You would think that they necessarily wouldn't, but they always seem to love taxes, which is awesome.
Yeah.
We love that. It is. It definitely is. All right. So let's wrap up. I'll just continue to share my screen. One moment. Wow. Okay. Next question. It's our last question that we always ask on every single KiddieNomics webinar. What would happen if kids became more financially literate? And our answer is real change that impacts the world. And why is that? Because we believe that the more educated that you become in financial literacy, just the more options there are out there for you, because you can be whatever it is that you want to be, and financial literacy is just going to enhance that and help get you to wherever it is you want to be or go. So it doesn't matter if you want to become a CPA or you want to become a doctor or a musician, or it doesn't matter, right? You're always going to need to learn financial literacy and just learn some of the basics of it, right? Because it will help you as you get older. All right, so we love to call you guys our young financial literacy ambassadors. But what is an ambassador, right? So an ambassador is an authorized messenger or representative. And that means we authorize you to be our messengers out there and share KiddieNomics, share what you've learned on KiddieNomics, because the more that you guys share what you learn, that you guys will become stronger and the people around you will become stronger. So including your friends and your family and your whole community at large. And that's why we say knowledge is our
superpower.
Knowledge is our superpower. So go ahead and share it. Tell your parents, tell them what you learned on KiddieNomics if they're not watching it with you. Tell your brothers and your sisters and your aunties and your uncles and all your friends, because you know what? The more that they know, the better it is that for them. And honestly, the stronger that you become. And that's our definition of a superhero, right? All right, so let's talk about our schedule for the month of April. This week we had Miss Gloria, who is absolutely phenomenal. So thank you, Miss Gloria. Next week we have Miss Cynthia Mason and Miss Kimberly, and they're going to talk to us about business trademarks. So trademarks for businesses, which is another one. So we're going to talk about like copywriting and just understanding, you know, your business, your logo, your identity. You don't want other people to copy it, right? So you may want to get your business or your logo or a saying trademark so nobody can copy what you're doing. Okay, so that's going to be next week on Friday, April 16th. Then the week after that, we will have Miss Michelle Williamson. This is a great one. So we talked last year about talking about more an international feel for investments. So we are going to have her on Friday, April 23rd. And we're going to talk about investing in Florida real estate. So Florida is in the US. And so do we have anybody from the US on today? I'm not sure. I don't think I seen that in the chat box. So, and maybe I missed it. But Florida's in the US and it's nice and sunny and bright. And we have a lot of Canadians that tend to go down to Florida and buy vacation properties on there or from there. So Tracy, you want me to go back a page? Okay, I will. So we're going to talk about what does that look like, investing into Florida.
Yeah.
Oh, wait, sorry, Tracy, hang on. And then right after that, the following week, the month, to end the month of April, we have Miss Billie Jane Bolton Rojo. She will be back on KiddieNomics. Miss Billie Jane has been on KiddieNomics many times.
Like 5 times.
Probably around 5 times. She's been on KiddieNomics many times. As you said, we love to have our experts come back. And so she'll be on Friday, April 30th. And we're going to talk about university and college scholarships. So as you guys start getting older and maybe start thinking about what it is that you want to be and become, let's start talking about what scholarships may be available for you out there and grants that may be available to you out there to help get you into, to help you pay for university or college, okay? All right. And so this is another special KiddieNomics one that we have coming up. We are going to have on the phenomenal Miss Marcy Ian. So many of you may know her from The Social. She used to be the co-host of The Social, which is a national talk show. But Miss Marcy Ian has become an MP for the Liberal Party in the Toronto riding. And we are going to talk to Miss Marcy Ian about the power of pivoting. And we're just going to do more of a question and answer one like we did with Dr. Jill Andrew. So I do want your questions for Miss Ian. Okay, so if you can please either send me your questions at kiddienomics101@gmail.com, or you can type them into the chat box. This webinar will be in May, on Friday, May 21st. So we do have some time, but I'm preparing you so that you understand I need your questions so that I can send them to her, okay? And thank you to the ones that have already submitted some questions to me because I've already written them down, okay? Okay, Tracy, is it this screen that you want to see? Don't forget, everybody, that this screen, I don't have this screen, Tracy.
I think it's this one.
I don't think so. Oh, yes. Okay. Oops. Was it this one? Okay. I'll wrap up for the last one. Also, just to remind you guys, I always want your input. I know some of you do send me what you would like to learn on KiddieNomics. And so when you tell me a KiddieNomics idea, I do find an expert for you so that we can host that webinar. So always remember, you can always contact me at KiddieNomics101. And of course, if you do find our information valuable on KiddieNomics, can you please like and follow us on
Instagram, Twitter, Facebook, TikTok, and YouTube.
Instagram, Twitter, Facebook, TikTok, and YouTube. Yes, we have a TikTok account. We keep talking about this TikTok account. It's been a year.
Why.
We will do a video one of these days.
One of these days.
All right. Okay. So we'd like to thank everybody for joining. We will see everybody next week. Have a fabulous spring break week. Okay, I hope you guys enjoy it. We should have some nice weather, so hopefully you'll be able to get out and get active. We would love that. And then we'll see you on the Friday. Everybody have a good week. Thank you again to Miss Gloria, and bye. Okay.